It's about that time of day again. My name is Joseph James. Tonight's Wednesday evening, November 30th, 2016, and this is your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is bullish, very bullish, and hunting for that $50 round number tomorrow after today's OPEC meeting sent prices soaring higher. E-mini S&P is bearish, trading at the measured move and the low of a bear channel, so we're waiting for a correction to sell more tomorrow on the E-mini. Gold, the yellow metal, is bearish and trading at a measured move, which tells the sellers to stay patient for a pullback. Euro is bearish, trying to retest the lows, but we have a short-term bull channel with what we call a grind break, telling us to expect higher prices in the short term, so stay patient on the euro if you're a bear. FDAX is also bearish, trading at the lows of a wide bear channel this evening, just a few inches away from completing the measured move, so we're looking for traps above prior swings overhead. Boy, I got a great end of the month newsletter in store for you guys. We get the first day of the month of December coming right around the corner. You know what I always say, though, the only place to watch the full-length version of this video is here on our blog at Sideways Markets. If you're on the YouTube channel right now, you're watching a very small portion of our newsletter video. Don't forget, only full-length versions on the blog at Sideways Markets. If you're watching the YouTube video right now, there's a link in the description of that YouTube video. Follow that link. Come over here and join me on the blog at sidewaysmarkets.com and watch the full-length version. While you're here, please don't forget, join the mailing list. Upper left-hand corner, give me your name, your email address, and I'll send you an email every evening when our nightly newsletter goes live. Download those charts right below the video tonight. You'll see a spot to download all of today's charts I'm using in tonight's video. That way you'll have them ready for your trading session tomorrow. In the upper right-hand corner, don't forget, grab your free pass. Come out and join me as a guest for a few days this week, next week. Grab your free pass in the upper right-hand corner if you're not a member here at School of Trade. And don't forget, if you're brand new here to the SOT community, got a great frequently asked questions page on the right-hand side of our blog. That way you can get the who, what, where, when, and why. We're known as being the industry leader in professional grade trading education. And please don't forget, I'm here standing by to help you guys out. If you have any questions along the way, hit me up on the live support button on the right-hand side of the website. Hope you guys and gals are having a great week here so far. We were expecting some fireworks in today's session. We talked about this in last night's newsletter. End of the month, always expected to see some volatility. And of course, we had the big OPEC announcement coming out today. At this point, they have reached a tentative agreement for a production freeze. It'll be solidified later on this year, a couple weeks from now, middle of December. We're still waiting on a few non-OPEC nations, right, mainly Russia, to be able to come in and confirm as well. We have seen this before, right? So this is not written in stone. We have seen, in theory, a production cut. Everyone leaves the table saying, yeah, we're gonna cut production. But soon it kind of falls apart. People cheat. They don't follow the rules. And, of course, it ends up kind of collapsing on top of itself. So we'll have to wait and see what the next few days bring. We definitely are expecting, though, to be some more excellent volatility and, of course, more opportunities coming for all of us crude oil traders out there in the wake of this OPEC meeting. And again, I believe I saw the next meeting is the 9th of December, right? The 12th of December. I can't recall, but it'll be early, right? So by mid-December, we should know more about whether or not this actual production cut, right, has actually been official, right, or if it's been written in stone here. So more to come on that. For tomorrow, we get the first of the month. Big opportunity coming up here. End of the month, first of a new month. Everybody's going to be chomping at the bit here trying to get the month of December off to a great start. And I'm looking forward to seeing you guys with me tomorrow morning in our trade room in real time at 8 o'clock Eastern time. So here we go. We got some important news coming out tomorrow morning. Red Star news on the calendar for Thursday morning. We got 2 a.m. news, 3:50, 3:55, and 5 a.m. news tomorrow morning if you're trading the London session. So be aware of that, right? If you're coming in early tomorrow, if you're in Europe, right? 2 a.m., 3:50, 3:55, and of course, that 5 a.m. GDP. In the U.S. session tomorrow, we get the jobless claims at 8:30. Taking a look at the U.S. session tomorrow. Jobless claims at 8:30 a.m. PMI at 9:45. I'm not going to worry about that one, but we do have the ISM Manufacturing Index at 10 a.m. tomorrow. So jobless claims, it's a red star news event, but in all reality, we haven't seen the jobless claims move the needle in quite some time here. Jobless claims, it might change after the election, but it's been pretty obvious to traders that those jobless claims have been pretty much a waste of information over the past few years, as people leaving the workforce are not counted right in those jobless claims. So more accurate will be Friday's non-farm payroll, which we'll talk more about right tomorrow night on tomorrow night's newsletter. So again, we have 8:30 news tomorrow morning, but probably not going to be that big of a mover. The big news tomorrow morning will be around that 10 o'clock hour, right, from the ISM Manufacturing Index. Got a lot of data coming out tomorrow, right, of course, throughout London and the U.S. And one thing to keep in mind for tomorrow is tomorrow afternoon, we should be seeing the volume dry up a little bit earlier than normal, just because we're going into non-farm Friday, right? The first Friday of every month, we see the employment number. That's the big jobs number that everyone's watching, right? The jobless claims number is pretty much a waste of our energy. So not tomorrow, but Friday, right, at 8:30 a.m. What I want you to be aware of tomorrow is brand new month, brand new opportunities, expecting some great moves tomorrow, but watch out for that volume drying up late in the day tomorrow, a little bit earlier than normal, as traders start to kind of take cover ahead of that employment number on Friday morning. We'll come back tomorrow night, though, and we'll talk more about the plan for Friday's employment situation number when we get there. Let's jump right in. I apologize, I'm late here tonight on the video. Had a very, very busy day here in our office here in Los Angeles. Hope you guys have a great week so far. Crude is bullish and hunting for that $50 round number tomorrow, after today's OPEC meeting sent prices soaring higher on the likelihood of a production freeze, which will be finalized in mid-December. The bulls have control, and with such a big run higher today, we know that most of the buyers are already either in this move or they're waiting for a chance to get in on the next deep pullback off these highs. Buyers will be looking for rotation off the lows of the channel, or a deeper pullback to the support levels waiting below for a target going back up to retest the highs. And of course, you got that $50 a barrel area just lingering there, right, a few ticks above that high. Now, let's be honest, with such a big move today, we may see a sharp correction. Right, the sellers definitely have a window of opportunity tomorrow. With such a big move today, we may see a sharp correction back to the battle zone around 47.56, which will give the sellers the open space they need to grab some profit to the downside tomorrow. When I see a market like this, and you can kind of see what I've highlighted here, it's a spiking channel, right? It's basically a spiking channel, right? Spike up, channel out. Buyers right now ideally are looking to buy pullbacks 48.31, 47.81, 47.15, let's say $47 a barrel, right? 47 even. So these areas, right? Again, 1, 2, 3, these are where the buyers would really love to be able to participate with this. So if you're a bull tomorrow, the most desirable spot here will be breaking down, right? Coming off of 48.31, coming off of 47.81, right? Or all the way down into what we call the battle zone, right? As far as 47 even. Once we get below that battle zone, now the buyers are pretty much failing, and we'll expect a retest of that high. Now, that $50 a barrel area is just staring us right in the face here, and they already got their measured move, so we know the buyers have an objective. The buyer's objective at this point is to retest the high, which of course just happens to be right about $50 a barrel. So I don't want to say the objective is 50, but if they do get back to retest the high, I find it very hard to believe they won't just find a way up to that $50 a barrel. So that will definitely be the objective, going back up to the high. Now, we have to remember the buyers had a very good day today, right? Very strong bull market. They're probably not going to want to buy high here. I put myself, and there may be some excess kind of bullishness coming in here, so we may kind of slam into these highs whether we like it or not. But if I'm a buyer right now, I'm either already in this move from earlier in the day, or for some reason I missed the move, or I'm flat, and I'm looking at this market going, well, I want to be a buyer, but I don't want to buy this high. I want to buy on a pullback. I want to buy at a much cheaper price. So while we do expect to see bulls here, and they may, right, breakout pullback, right, breakout pullback, and run higher. That will definitely be the most aggressive trade, right? Just because you're buying right into that high. What would definitely be a lot more desirable would be really anything as far as a trap low, right? Any trap low, right? So trap below a prior swing, seller failure, and buy it back up. Pull back to a prior swing, seller failure, and back up. The bottom line is tomorrow morning in our trade room, we're going to be looking at all of these prior swings. Let's mark that one up as well. And looking for those deep pullbacks, right, to get that price, again, depending on which one, right, is when we get that turn, right? So one thing to keep in mind is although we can buy on the way up to it, be much, much more reliable and a lot more desirable if we get this price back down to some prior areas of support. Now, with that said, there's a big, big space down here between where we are right now and that battle zone. The battle zone is kind of, you got to be thinking about long-term buyers here. If I'm a long-term swing buyer, I have an order waiting at 48.81, 48.30, right? 47.80, right? I've got buy orders just waiting here. I'll buy some here, I'll buy some here, I'll buy some here, knowing that the odds are still very high, right, that price goes up. So the only way that sellers can be confident with this right now is if we see a real strong move lower, strong enough now to keep those buyers from buying into it, but more importantly, to give those sellers the confidence they need, right, to sell that pullback. So anything else besides a real strong move that can then hold that pullback, anything else right now is going to be seen as a discount, right, and a buying opportunity. So keep your eyes on these prior swings. And again, we're looking for failures, right, looking for pullbacks as we head back down, right, or as we peel off this low, seller failure, breakout pullback, and back down. So buy those dips, avoid buying high. Now, what if we do go right up to that high, right? Again, like I said, a lot of folks come in right now, they're going to say, wow, I want to be a buyer off the low of this channel. If it does just jump up to this high, now you want to be thinking in terms of a possible trading range. When the bulls have control, the buyers will keep buying until they reach their objective, right? So if we do end up running up to reach the objective, then take a look out for a trading range and keep buying the low, right? Buying the low of that range. I want to be a buyer, but I don't want to buy high, right? So find a little short-term trading range, buy the lows using traps, using failures. And don't forget, we teach all of these specific entry techniques, all of these specific traps, failures, strength trades, pullbacks, right? We teach all this stuff, right? And we trade it every day together, real time in our trade room, all right? So ideally, buy those pullbacks. If it slams higher here, watch for that consolidation range and make sure you focus on buying low tomorrow on the old crude. How about some S&P? S&P's bearish and trading at the measured move and the low of a bear channel this evening. The sellers have clear control, but they won't be interested in selling the low. So our best option for selling opportunities will be up at the resistance levels overhead, such as the high of the channel and the battle zone for a move back down to retest the lows. This is very similar, but the opposite direction of what we just saw on crude oil, where the buyers are in control on crude oil, but they don't want to buy the high. The sellers are clearly in control, but look where they are, right? They're right down at the low of this channel, so they definitely want to be patient and look for chances to sell without selling low. The buyers, on the other hand, need to break and hold above the high of this channel if they want any chance at getting up to that battle zone tomorrow, so stay patient if you're a buyer. As you can see here today, pretty much a complete polar opposite of what crude was doing here today, right? Buyers, of course, failing after the run up and completely rolling over here, right, on the S&P for a very strong measured move down, possible triple measured move, right? And of course, that bear channel. What a great example of the correct, or should I say, the most reliable way to draw this channel, right? It's tempting to draw the channel a little bit wider here, but in all reality, we always want to focus on rotation, high to low, low to high, high to low, low to high, right? So that's going to be your most reliable look at that channel. You can see how the sellers definitely got a little bit overzealous as they pushed this price through that low. So We're going to see another example of this on the FDAX later on in this video, but what you want to be thinking is get this price up so I can sell it back down. Get it up so I can sell it back down. And what you really want to be thinking about something like that is that there's going to be enough room here for the buyers to take control as it goes higher, right? So buyers make it a shot.